Stocks fall today. The Dow Jones Industrial Average posting a decline of more than 130 points. Oil also retreating down 2.5%, and copper falling 3%. Our senior markets correspondent Julie Hyman joins us now for a look at some of the defensive industries that may have led the gains, right? I mean, because if you take a look,
have been leading the gains recently.
The only stock today that I noticed that was up in the Dow Jones Industrial Average was McDonald's, a food stock.
I mean, essentially what we've seen happening recently is this risk aversion is sort of the technical term for it. People are getting worried. They're getting worried about global growth. The situation with Greece doesn't help coming out of Europe over the weekend, or not coming out of Europe over the basically no change, and concerns about default or restructuring, what's going to happen there. So uncertainty is making investors cautious, and that's reflected in selling of stocks, selling of commodities, selling of the euro, buying of the dollar, and buying of bonds. And the other way it's manifested itself is buying so-called defensive stocks. Since March 16th, we've seen the defensives lead far and away the gains in the S&P 500. So healthcare has been the top performing group since March 16th, up more than 10%. Telecom services, utilities, consumer staples, all of them have been doing well. And what some investors say, we'll get to that chart in just a second. What some investors say is, well, if defensives are leading the recent rally that we've seen, then the quality of the rally is not good, and it's going to end, because really you have to depend on more cyclical groups that are dependent on an economic recovery to lead us out of it. So there's the recent performance that we have seen.
Healthcare, consumer staples, telecom services, and utilities. And there was another report today that came out of China, actually, for American investors, that was at 4 a.m.
Right.
This having to do with the purchasers managers index, the PMI, in China, and this is something that's put together by HSBC and Matrix, and it looks as though the PMI in China fell, and it's at its lowest level in 10 months.
Right.
So a lot of people selling copper, selling industrial metals because they're worried about economic growth in China.
Right, exactly. So again, the thinking goes that we should be concerned. Well, Barini Associates says don't make this bet because of the defensives. Don't say, well, if defensives are rallying, it means the rest of the market cannot continue to go up. And they went back and looked at history. That's what they tend to do. And they said the last several times that we've had defensives outperform the rest of the market by at least 5 percentage points, the market keeps going up in the following 3 months by 11% on average. So, you know, there are sort of arguments to be made either way. And we still talk to a lot of investors who are bullish for the longer term, even if right now is tumultuous.
All right, well, let's go to Deborah Kostroun. She's on the floor of the New York Stock Exchange to find out about today's stock market performance. This coming after those warnings about Europeans' debt crisis. Let's find out about the details in today's trade. Deborah?
Thanks a lot, Pimm. Yes, and, you know, stocks falling today. And at one point, the Dow was down 180 points. So the Dow was down 130. We didn't close on the lows, but, hey, when you look at a one-day chart, we were in the doldrums all day long. And, of course, the big concern is Europe's debt crisis may be getting worse. That also led the euro to touch an all-time low versus the Swiss franc. Now, in addition to that, we had all these concerns that the economic recovery is slowing down. And Julie and Pimm kind of talking about this a little bit after China's manufacturing growth was weaker than expected. That led a lot of material stocks like Freeport-McMoRan lower. And we also saw commodities like oil and copper, as they had mentioned, also lower. Now, industrial stocks like Caterpillar also lower. That was a big drag in the S&P. And all across the board, what we did see, all 12 economic groups and the S&P were lower, Pimm.
Now, Deborah, all right, we've been worried about a number of things in the market, but particularly Greek debt. And today we also got news about Standard & Poor's cutting Italy's debt rating outlook, and also warnings about debt in Belgium.
Right. And so this is just kind of the overarching theme of today. All these worries about the European debt crisis. And because of that, what we did see, that led the financials down, not only here in the U.S., but around the world. And when you take a look, some of those financial stocks certainly lower. We felt it here with Bank of America and Citigroup. Those stocks were lower. And also another thing that we saw today, the S&P was down the most in 2 months. And if you take a look at the technicals and you're looking at the S&P closing below that 50-day moving average for the first time since April 19th. So that's in more than a month. And that is certainly a trend that traders do watch, of course, those technicals. And it also suggests that we could see more losses. So a big concern when the S&P closes below that 50-day moving average. And, Pimm, something else that people are talking about on tap for tomorrow, we do have new home sales. That will likely be a big driver for trading here as we just get one more piece of the puzzle. And, of course, we know that home home sales have really not been all that stellar, but we are certainly waiting to see what we get tomorrow.
All right, I want to thank you very much, Deborah Kostroun, reporting from the New York Stock Exchange.